All right, everybody, it is Friday the 13th, June 13th. Let me just make an announcement for those of you who maybe have been trying to go to my website. There are some technical issues that we're trying to fix, and my hosting company, Bluehost, they suck. And if you're ever thinking of looking for a hosting company, do not go to Bluehost. The worst customer service and technical support that you could possibly imagine. They suck. Don't go there. Anyway, I'm going to move the site over to my other one, mmteconomics.com. That's being worked on, and so it'll be fixed. Just be patient. If you want to sign up, send me an email at mnorman@pitbulleconomics.com. But don't worry, the site is going to be repaired and everything will be up. I just want to make that announcement. So today, it was interesting because we had a lot of bearish, hawkish Fed speak in the morning. That Bullard, who is he? A St. Louis Fed president or something? I don't know. I don't even pay attention to these guys, but he's like, yeah, we gotta keep jacking those rates up, and of course that triggered the monetarist zombies. Of course, I sent out an email saying you got to buy that dip. The other thing that happened was the bank earnings came out, J.P. Morgan and a couple other banks, and they sold the banks off, and I'm like, this is a gift. This is a total gift, and I sent out an email to my subscribers, buy this, down day in the banks right now, and they all ended up positive. As a matter of fact, J.P. Morgan had a new 52-week high. So, look, folks, I've been trying to explain, the Fed is just handing money to the banks. I think it's something like $650 million a day, and that number keeps rising as the Fed keeps raising interest rates. Let me go back to Bullard for a second with this macho, tough guy Fed speak. We got to keep rates going up. I mean, the incredible thing is they don't even seem to realize that this is a massive, massive stimulus program. I mean, the amount of interest income transfers going into the economy right now, and I've been telling you guys this, since last year. I was telling you that this is it's gonna accelerate. And the funny thing is, any of the coverage about the interest income transfers is always kind of framed in a way as to say, oh, look how much the government's going to have to pay. It's going to be the largest line item on its the largest line item on its payments. Yeah, and it's going to people and institutions. Now, again, don't be mad at me that it's going to people who have money and it's going to financial institutions. I get it. And I'm not for that. But again, what I said yesterday, I just try to focus on that swimming pool. Because if I start focusing on, hey, there's inequity, I mean, there's always going to be inequity. For me, as an investor, because I'm trying to make money doing this, and to make money, like I said yesterday, you want to be able to go play golf and not have to worry and have a simple understanding of what's going on, and let all these other, very serious people just micro-focus on their little things and Fed policy and did he say this word or what does it mean? Let me parse the language and figure out if he meant this or she meant this or that. I mean, that to me is just it's idiocy. So for me as an investor and as an economist, I want to just keep that macro picture in my head. And again, I want to repeat, I'm going to keep repeating to you guys, just try to determine, is the swimming pool filling up or are they draining it? And they're definitely filling it up. And now the rate of fill is really starting to accelerate. Like yesterday was a 50 billion flow day, not net flow of about 38 billion or something. 50 billion, I didn't see that coming at all because That was from a $35 billion transfer to Department of Labor pension accounts. So like now, the average daily flow, leading spending flow, is like where we were in May 2022. We're 63 billion now above where we were before the December tax strain. So we made all of that back plus another 63 billion. It's a swimming pool going up. We got back to the level of the before the tax strain, and then another 63 billion on top of that. So it's academic, folks. It's just academic. Now, I saw something very funny today. Cathy Wood, ARK Investments, she has that fund, and she went from like last year being a super bull. I think she was really bullish on crypto and stuff like that, and other stocks. I don't know if Tesla was one of them. Now she's a super bear. Like, I'm not going to knock her on individual stock picks because, you know, everybody could get that wrong once in a while. But I will knock her now on the macro outlook. She said this is going to be like 1929 if the Fed doesn't stop raising interest rates. And right there, it tells you that she has bought into the zombie monetarist hype, like completely. Lock, stock, and barrel, she has bought into it. I mean, I've just explained to you, and it's getting out there. It's just not getting out there in the way that I explain it to you, which is the correct way, that these are massive, massive income transfers. And so you're not going to have 1929 because these income transfers are literally happening because the Fed has raised interest rates. So the increase in interest rates in no way, shape, or form is going to cause 1929. You know what would cause 1929? A massive austerity program. And that, by the way, that's something we have to talk about because that could definitely be, you know, down the road. I mean, I saw a thing today where the GOP in Congress, they want to, after the September 30th end of the fiscal year, they want to push through massive spending cuts. Massive. And if that happens, yeah, we go very quickly into a deep, deep recession. So, but I've been warning you guys about this. You see, I'm always like way ahead and letting you know what the roadmap looks like. That's the important thing. But anyway, listen, everybody, it's Friday. Don't worry about the website. It's going to be fixed. If you got any issues, send me an email at mnorman@pitbulleconomics.com. And I'm going to go enjoy my Friday. Have a good weekend. Bye.